Kelly, thanks very much. President Kaplan, thanks for joining us. I want to start where Kelly suggested, which is on the dissent, and two particular aspects of the dissent I want to ask you about. The first is your concern about excessive risk-taking. Seems like a good question on a day when the market's up 461 points, it looks like on my screen right now. How much concern do you have that the Fed's promises to remain accommodative for many, many years could engender excessive risk-taking in the stock market and in the bond market?
Yeah, I'm generally worried that if we keep rates at zero for longer than we have to, that it forces people out on the risk curve, and they've got to take more risk. You can't have money in savings. You can't have money in bonds by and large, especially shorter bonds. And I think we saw a little bit of this in March, in that part of the sell-off in March was COVID related and lockdown related, but part of it was some forced selling in risk markets because people had too much risk on. And that's what happens, and that's the danger if you go for a prolonged period of time and you get excess risk-taking. When the markets do go down, it could be more severe and destabilizing.
Is there a concern about that right now, given the levels of the market?
I don't think I'm not worried about monetary policy or the things we're doing. Obviously, we're doing extraordinary actions, not just the Fed funds rate, but also what we're doing with the 13.3 programs and asset buying. But we need to, because it's a crisis. And so I think we're going to need to keep the Fed funds rate at zero. I've said publicly for the next probably 2.5 to 3 years, could be that long, until we get on track to have weathered the crisis and are on track to meet our full employment and price stability goals. My dissent is about making commitments beyond that point, and that I think beyond that point, I'd rather see us keep some flexibility.
So let me follow up on that. When people tune into Kelly Evans and the Exchange, they know they're going to get a serious discussion of Federal Reserve policy. So President Kaplan, can you explain your notion in your dissent, or in the essay you wrote about your dissent, how it is that the Fed, if it stays at zero while the economy improves, the Fed actually becomes more accommodative as the economy improves? How does that work?
Yeah. So what happens in the midst and the height of the COVID pandemic? The neutral rate, the equilibrium interest rate, drops, and so we said pre-pandemic that maybe the neutral rate, the equilibrium Fed funds rate, was something like, say, 2.25% to 2.5%. What happens when you have a severe downturn is it drops. And so what that means is the Fed's got to really take extraordinary action, and we did, to drop rates to zero and do other things in order to create accommodation to help us dig out of this hole that's been dug because of the pandemic. As we approach, though, ideally over the next 2 or 3 years, as we start approaching, though, full employment and price stability, as we start approaching our 2% target, the neutral rate, as we recover, is going to start drifting up again. And in fact, you saw in the summary of economic projections that each of us submitted this last meeting, I think the median estimate for the neutral rate longer term is something like 2.5%. So to your point, if you keep rates at zero as you're approaching full employment, it's a little bit analogous to not only are we not taking our foot off the accelerator, but we're actually depressing the accelerator and increasing accommodation as we move toward meeting our dual mandated goals. And what I'm saying is, I don't know if that's going to be appropriate. Historically, it wouldn't have been. With the new framework and our inflation targets, I think we're going to be more accommodative than we have been in the past. But I don't know if we want to be committing to keeping rates at zero until we meet these targets, because the amount of accommodation is going to be widening. And I don't know if that's going to be appropriate.
Thanks.
Shepard Smith here. Thanks for watching CNBC on YouTube.